Canadian banks are being hit with downgrades as the economic storm clouds gather over Canada and the increase in economic uncertainty goes parabolic. So let's see exactly what's going on here. So Canadian banks hit with downgrades as economic storm clouds gather. But I thought everything was great. The government keeps telling me, we got your back. Everything's going to be fine. So let's see what they're talking about here. Shares of TD fell more than 1% throughout the trading day after Icahn downgraded the bank from overweight to equal weight, the equivalent of moving a stock from buy to hold. RBC's stock also fell more than 1% after being downgraded from overweight to underweight, and Scotiabank shares fell by just over 2% after it was downgraded from equal weight to underweight. Icahn also slashed his outlook for the sector to neutral from positive. Though some analysts argue that Canadian banks haven't been hit by the full brunt of the United States banking crisis, economic uncertainty ahead is raising concerns for the financial sector. Still, those risks are unlikely to show up when Canadian banks report earnings at the end of the month. And I do agree with that. I do agree that, it's not going to show up in their earnings that they're going to report. Again, these are backward looking. And they're highly manipulated and highly artificial when you really think about it. I mean, just go back and look at how the banks were reporting in the United States before the financial crisis. Everything was looking great. So, earnings, they don't really show us the big picture. And there's a lot of things that banks do, obviously, off balance sheet between each other that we don't know about. But the main thing that kind of baffles me is that these analysts are just still completely asleep. But again, these are mainstream analysts, and they're essentially not even looking at what's going on when it comes to these fixed payment variable rate mortgages. The amount of risk that these banks are holding on to, certain banks like the Royal Bank and other banks, they're holding on to unbelievable amounts of risks as their borrowers aren't paying their mortgage and they're giving them more debt. It's just absolutely insane. We've got to that point where people can't even make the debt payments. They can't even make the interest payments for their debt because they have so much. That is how insane things have got in Canada here in 2023. Remember that, because that is such a sign of a bubble, and what normally pops these financial bubbles every time. Japan, the United States, Ireland, the UK, interest rates. Every time, interest rates. Nobody sees it coming, but here we are again. So, it's just kind of mad. These cycles repeat, but it's always different these times. I mean, they rhyme, but they don't often repeat, I should say. So while we do not anticipate that Canadian banks' second quarter will demonstrate much earnings weakness, we believe that cracks in the foundation will become evident, Icahn said in a note. Further, with an uncertain outlook and a looming recession, we anticipate that there will continue to be pressure on the bank's valuations and declining confidence in their earnings. And yeah, I totally agree with that, because again, when you're talking about the bank's earnings, you have to remember a lot of the income that they make comes from the amount of debt they sell. It's not from interest like it's been in the past. Now, don't get me wrong, they're making a lot of money off the interest rates right now. But the problem is with that, obviously, there is a massive amount of risk. It's a ticking time bomb. The risk just keeps increasing. And we keep on seeing these surveys come forward about how people can't afford to pay their bills and everything. And, so many people are probably sat there going, everything looks fine. I go to the mall. I mean, just use this. Use your head. Tell those people, say, what is wrong with you? There's something going on here. They're taking on more debt. The banks are allowing them to do that. And it helps buffer their earnings as well. It helps make their earnings look better for the short term. But long term, it makes an even worse situation when people start losing their jobs, because the amount of debt they've leveraged is just absolutely insane, as we know on this channel. So higher interest rates have been a double-edged sword for the banks, because they've expanded net interest margins, giving the banks potential to earn more interest at the cost of weighing on mortgage demand. Net interest margin, the gap between interest income a bank earns through lending and the interest it pays out to lenders in areas such as checking accounts, has helped support the bank's earnings over the past few quarters. And yeah, I totally agree with that. They're basically just talking about how the banks are making more money from the interest rates, like I just discussed. and that helps offset the decline that they've seen in the amount of people taking out mortgages and everything like that. So I do think that's important to note and talk about. So I want to move on now and talk about mortgage debt for a second, because this chart, it really tells a story of what's going on. The growth of this thing has been absolutely insane. So we're at 2.08 trillion, and this is November 2022, so it hasn't been updated yet. But if you go back to before 2020 to around November 2019, 1.63 trillion. Just think about that. The amount of growth, like over 20% of growth in mortgage debt in 4 years. Is that healthy? Is that really healthy? Not even in 4 years, in 3 years, essentially. Is that healthy? And the answer to that question is obviously no. And that is exactly what you would expect to see in the final stage, in that mania stage, where people just throw caution into the wind. They go absolutely insane. They think they cannot lose. They cannot lose. Just think about how that mentality has just been, everywhere. That just sums up 2020 and 2021. Well, 2021 and 2022 is just, and it's still going on. I still see it with the short-term rentals, with Airbnb, like that arrogance is still there from people that everything's going to be fine if I just do no research, plumb all my life savings, or leverage my home to buy an investment Airbnb in a different country. Everything's going to be fine. I'm a real estate investor. And again, like, it's just like the stock market. It's just like the stock market. People think they can't lose in real estate. People think they can't lose in the stock market. The reality is the markets are incredibly similar in a lot of different ways. The psychology, the people behind there are exactly the same. The human psychology is exactly the same. So another thing I want to take you over to is household credit market debts as disposable income. You can see how this thing has peaked at around 180% and is just flatlined. Like it's really, it went over it during the mania and it's come back down now. So it seems like we've hit a top in the household credit market debt at 100%, 180% of income. And then if we go to debt to GDP, you can see how this has peaked. That is not a good sign. We haven't seen a peak like this before in a long, long time. In fact, in the past 20, 30 years, we haven't seen a peak like this. When you see a peak like this, as I'm going to show you with the United States right now, it's not a good sign, because look what happened in the United States where it peaked out. That was, in fact, during the financial crisis. And when it peaked out actually was, around 2007, 2008. That was literally when the bubble all started to implode on itself. And it doesn't look like it's any different situation in this. And then if you look at this as well, I mean, this is household debt to GDP for the entire world. And you can see Canada ranks number 4. And you've got Switzerland, Australia, South Korea on that list. They're also high up on there. There's lots of other bubbles that we know about as well. New Zealand, Hong Kong are also bubbles. And, it's just kind of insane, because when you go to the debt to income and take a look at that, you see New Zealand on there again, but you don't see some of those others, but you constantly see Canada on there. And you've got to ask the question, well, what's going on here? Why does Canada just keep appearing on this list? And the reality is that it doesn't matter whether you're talking about corporate debt, whether you're talking about household debt. The reality is there is so much debt in Canada. I mean, the charts don't lie, guys. The charts do not lie. When you look at the household debt to GDP, you can see it's clearly elevated, because if you look at this, we got up to nearly 110, 115% Canada household debt to GDP. If we flick across to the US right now, you can see that they in fact peaked at just below 100%. So what does that tell you? What does that tell you about where Canada is? Canada has got into this kind of mania. It's built an economy around the real estate market as well. There's been so much malinvestment. There's been so much money that could have gone into productive means that has just gone into completely unproductive assets in Canada. that it's kind of a joke when you really visit cities like Vancouver, cities like Toronto. You know, I was in London just last week, and comparing like a place like London here in England to a place like Toronto, there's no comparison. Toronto just looks like a complete dump, and it's not a world-class city. It's not a financial hub for the world either. So, you know, it's just this real estate bubble, this massive real estate bubble, which has probably made people think and come up with all these stories, because something remains, you know, no matter what bubble I visited, whether it's in Mexico or whether it was in the United States or whether it's in Canada or whether it's in the UK, wherever you go, you will always find different stories that people make up and tell themselves to believe that the bubble is in fact real. It's just the fact that none of these stories have any fundamental behind them backing them up. It's just all complete stories, essentially. So anyway, if you've enjoyed this video here, you might like that video here, you might also like that video there. I want to thank you so much for watching another pre-recorded live stream, because I have to watch these before. Thank you so much, and I will see you in the next one. Take care.